Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing well. Hope everybody is trading well. Hopefully you guys are just getting to that point that things are starting to click. If you're not at that point yet, and again, everybody develops at their own different stages, keep your head up, keep working. Eventually it will click. The key is to omit the things that you know are not working, regardless of what your process is, and try to stick to things that you know are working well and break away from that whole social media. This is happening, that's happening. The only thing that's happening is your process and the world that's in your ecosystem, and everything else, eliminate the noise. If you are an avid viewer of the channel, guys, all I ask is click a like, right? Click a like, support the channel. Again, I will do my best to kind of share my thoughts, what's going to happen for the next day. And that's the key, folks. It's for the next day. It's not for a month from now, a year from now, 6 months from now. I don't have a crystal ball. I'm not that smart. Again, I've been saying for years and years and years, I'm the king of the idiots, okay? I don't know where a stock is going to be 5 days from now or 5 weeks from now. I have no idea, right? The only thing I do know is how to get prepared for the next day, collecting the data. Again, it's not the first time we talked about it, collecting the data and making sure that we are prepared on both sides. So if you are an investor, I'm probably not going to provide a lot of value for you, okay? I don't know where IBM is going to be next year. I don't know where Apple is going to be next year. I can tell you where I believe a stock can approach its price action, price discovery the next day based on the data. But that's it, right? That's it. I don't think there's anybody on the planet that can sit there and definitively tell you what's going to happen. So the only thing I do is get prepared for the next day. And, the market has been really good, right? I think that's the best way to describe it. Market has been very, very good for the last several years. Sure, we've had our ups and downs, we've had our hiccups, but if you look at the monthly view, right? If you look at the monthly view, this is going all the way back from 2020. I mean, it's been going gangbusters since the 2008, 2009 lows from the mortgage crisis. But if you look back, the market's been very, very healthy. That's kind of my point why I'm saying if you're an investor, my channel has nothing to do with you. But as a trader, we're getting a lot of value. We're getting a lot of two-sided value. And I tweeted this out early in the week. I don't remember a market in the last X amount of years that gave you such great value on both sides. Again, you could see there's some violence, right? In 2017, we saw violence. In 18, we saw violence. In 20, obviously, with the pandemic, we've seen violence. Massive violence in 2022, the bear market, that then the keys were down 35%. But then here's all our upside bias and the market's recovered. And this is why they tell you early on in your investment career, don't try to time the market, right? Stick your money in a safe S&P index. 20 years from now, you'll be okay. Absolutely. That has been the way the market has been structured for generations and generations. But if you are an active day trader, if you are an active two-sided market participant, the market has been really, really good. For all you guys who've been in the webinar for me for about 16 years, you kind of know that, right? You're getting crazy opportunities. And for me, I'm a very niche trader, okay? Even though I developed the PS60 theory, and again, for all you guys who don't know what that is, it's free. There's like 2 versions of it. One of it is like 4 hours. I break down the theory. It's free. You can find it online or whatever the case may be. Maybe Kenyon, I will post a link to it. But the point is, if the market is going to give you two-sided value, if market guides give you stocks to trade on both sides, well, why are you eliminating one side of the market? Why are you so asinine to think that your way is the right way? There's two sides of the market. Market goes up, market goes down. And the way I trade 90% of pretty much everything I do is the same 10 stocks, literally the same 10 stocks. Tesla, Nvidia, Meta, Google, Amazon. What else was there? All those, you know what I'm saying? Too early in the morning, right? Microsoft, right? All those names, and AMD once in a while, and I'm very, very fixed. And the reason why I trade the same 10 stocks over and over, well, number one, they're the most aggressive stocks on the market. They're the ones with pretty much the most institutional participation. Majority of the time, they're the ones with the biggest liquidity. So I know their tendencies. I know their average true range. I know trading Tesla is a little bit different than trading Microsoft. Trading Microsoft's a lot different than trading Nvidia's, and on and on and on. But the point is, the more you trade the same names over and over and over again, you know what to expect from them. There's no surprises. I know how Tesla's going to react if a level is violated. It has to react off that level, because if it doesn't react off that level in the first 2 minutes, I know that channel is compromised, and I have no problem throwing away a good hand. Again, that's the familiarity aspect of trading the same names over and over again. And the greatest part about being a two-sided trader, yes, I have a game plan going into the next day, right? I'll show you exactly what I mean on the Twitter feed in a second. I have a game plan going in every single day. But I also understand that both sides, right? A stock has two sides. It has an upside channel, it has a downside channel. So if my upside game plan is not playing out and it confirms the downside, quickly you can snap, right? Quickly you can snap. You can get pulled if you don't understand the ramifications of channels being lost. But as a two-sided trader, you're already prepared for it. Okay, you're not watching 200 stocks. I couldn't care less what a random stock is doing, right? I just don't care. It's not my thing. But I know where the channel of a Google is. I know where the channel of a Tesla is, and I know what happens, which should happen when those names confirm. And that's exactly what happened on Friday. And the most important part, and I think the bigger picture, if you've been watching this channel for a while, especially in the last month, you notice I've been talking about the same thing over and over. There's a lot of names below the 50-day moving average, right? And you can go through them. You have your Amazons of the world, right? You guys remember when it lost the 50-day moving average last week? You have Google, right? You have Google, lost the 50-day moving average on 2.5. You have Microsoft, right? You have Microsoft, lost its 50-day moving average on January the 30th, right? AMD has been in a mess, right? It's been an absolute mess. It's lost its 50-day moving average all the way on October the 30th. And there's a lot of names. Oh, Tesla, obviously. Tesla, right? Tesla's obviously lost its 50-day moving average on, February 3rd, right? February 3rd. So what's the common denominator, right? What's the common denominator? Number one, if you are a brand new trader to this channel, if you aren't, you kind of know what I'm about to say. A stock above the 50-day moving average is super bullish, right? Look at Tesla when it got back above the 50-day moving average in October, right? In October, the stock went literally from 218 to 488, right? Look what happens when it lost the 50-day moving average. Stock went from 389 all the way to 337. Actually, it went to 325. So the most basic thing is over the 50-day is macro bullish, risk on. Below the 50-day, it's macro bearish, risk off. However, we all know this. There's always going to be really good opportunities on both sides of the market, regardless if the stock is below the 50-day moving average. Again, stocks don't go straight down. Here's a perfect example. Microsoft. You guys remember Microsoft? From only 3 days ago, below the 50-day moving average, obviously bearish. That's the whole lifetime cycle of its ecosystem right now. But it gave us a phenomenal 2-day trade, right? It gave us a great trade. It reclaimed the 10-day moving average, went from 411, went all the way up to almost 420. That's a great trade. But it's a trade. It's not an investable area. And what happens as soon as they lost the previous day's range, right? Lost the previous day's range, and the stock went from 412 and closed pretty much at the lows of the day. And that's a very, very important part. People, especially investors, they start buying these stocks below the 50-day moving average. And as soon as they get an uptick in the stock, oh, that's the reversal. That's the lows. Who cares? You're not trying to buy the lows, okay? You're not trying to buy the lows. What you're trying to do is buy a stock that's coming out of a channel above supply. How can you want to get long a stock that's still sitting in terrible amounts of supply? Now, somebody asked me a question on Twitter. Well, how does a stock get back over supply? It's a great question. If it's a really, really strong market, and the market is uptrending and there's a lot of aggressive buying, over time, eventually a stock is going to get back over the 50-day moving average. That's exactly what happened with NVIDIA. You guys remember, right? It had a great rally, finally reclaimed the 50-day moving average, and went on a beautiful, beautiful 4-day run. But here's the problem, right? Here's the problem. Until that happens, there's no guarantee that your stock in a timely fashion is going to get back above the 50-day moving average. If you look at a lot of names, like again, look at the people who've been buying AMD for the last year, right? And they're saying, well, that's the low. Well, that's the low. Well, maybe this is the low. 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 Eventually, there has to be a low, right? Eventually, you will be right. Eventually, the stock in 5 years, you're going to look back and you say, hey, remember when the stock was trading at $100? Ha, yeah, ha, ha. Idiots, they sold. But what's stopping the stock? And again, I'm just using AMD as an example. I have nothing personal about AMD. I'm just kind of trying to make my point. What happens if the stock goes to 50? What happens if the stock goes to 40? It won't. It won't. Don't jump off a cliff. Okay. But my point is, what if? There's no guarantee. And the investor response is, well, it doesn't make a difference. I'm holding it for 10 years. Absolutely. If that is your plan, okay, if that is your plan, you say to yourself, I love AMD. And again, I'm just using it as an example. It could be A, B, C, D, E, F, G, right? I love A, B, C, D, E, G. Okay. I think the stock is going to be at 100 in 2 years. The stock's right now is 40. Well, what happens if the stock goes to 20? What happens if the stock goes to 10? Well, why don't you just buy it when it gets above the 50-day moving average? Well, I can wait. That's great. If you have a 5, 10, 15, 20-year horizon, that's an unbelievable attitude. If you are a short-term trader, quote-unquote swing trader, but let's be honest, right? If you buy a stock and it goes down 10%, that's not a big deal. It goes down 20%, starting to feel a little uncomfortable. Well, now the stock is down 30, 40%. How long are you willing to wait, right? And eventually you're going to have two sides of thinking. You're going to turn around and go, well, I don't want to be in the trade no more. I've taken too much losses. I want to get out of the trade. And the other person is going to come in and say, well, screw it. Might as well let the stock go to zero, which again, both of those ways of thinking is very counterproductive. All you got to do is literally wait for your favorite stock to get back above the 50-day moving average. And I kept on hearing about Tesla, for example, to Tesla for weeks and weeks and weeks. And again, granted, Tesla gave a really great 4-day bounce. Bounce, that's the key word. But somebody's saying, well, I think Tesla is going to be at 600 next year. Well, my question is, if you think Tesla is going to be at 600 next year, well, shouldn't it get back above the 50-day moving average first? Doesn't it have to, again, right now, as of right now, 400 is a 50-day. Doesn't it need to get back to 400 before it could go to 600? What's stopping it? Again, I don't want to freak anybody out, but what's stopping it, right? Let's just say we go into a hell of a hole type of market. What's stopping Tesla going down to all the way down to 273, the bottom channel? If it goes down to 273 in the bottom channel, again, I'm not saying it will. I'm just kind of trying to put an example. It's still monthly on a really, really big uptrend, right? Think about this. Even if the stock gets down to here, look at the massive, massive yearly uptrend the stock is in. So it's very, very easy to say, I don't care, I'll hold it, until you start looking at your statements and you realize, well, wait a minute. I'm starting to feel very, very uncomfortable. And now you're putting yourself in a position that you have to make a tough choice. Do I cut bait? I lost too much money. Or is it a scenario that, you know what, I'm going down with the ship? Again, two very, very weak ways to be a proactive investor. But I guess that is your goal. That is your desire, and that's your dime, and that's your dance floor, and you could do everything you want because you're a grown-up. On the trading aspect, okay, we trade channels. I trade channels, okay? I know if a stock takes out supply, it's going to go higher. If the stock takes out demand, it's going to go lower. I don't know where Tesla is going to be a year from now. I really don't. And anybody speaking in definitives, well, they had deliveries here, and I heard Kazakhstan is ordering an extra 4. Who the hell knows, right? Do you know? I'm an idiot, right? I don't know. If I could admit I don't know, and I'm doing this going on my 26th year, how can you say that, 2, 3, 4 years of your trading investment career and say definitively you know what's going to happen? Nobody knows what's going to happen. If we knew what happened, we'll just be buying it at one price and counting our money 2, 3, 4, 5 years. We don't know. At this juncture of our careers, at this juncture of market sentiment, we trade around the market. Again, this is why we're a trading channel. This is why the PS60 theory is a trading vehicle, because we're trying to take advantage of price action on both sides. So here's a prime example, right? Here's a prime example. So Google, right? Google. Initially, I was looking at it for the upside. 186 and 187 big areas need to confirm. Guess what? Google did not confirm that area. But you know what happened about an hour later? Well, Google, if it loses 182.72, if it builds below, can flush. That's the point, guys. That's the point of being ready on both sides of the market, right? That's the whole point. Because if you're not trading on both sides of the market, you're trading blind. If you don't know where your demand and supply zones, you're trading blind. Getting to a car, close your eyes and see if you can make it, a one-piece back. It's probably not going to happen. But here is my point. Here is the whole channel. It was a 5-day channel here. If it reclaimed the 186 to 187 level, the stock was going to start going to the next supply zone. But here is my point to the downside. Be ready on both sides. 182.70s was the low of this whole channel. This thing took out the low and we were ready. And that's the whole point. Be ready. Okay. Don't put yourself in a situation that you are in the market's, in the market's clutches. Be ready on both sides. If you're a trader, be proactive. Understand why the market's going higher. Understand why the market's going lower. And the probability of a stock below the 50-day moving average getting pulled first, getting pulled the hardest, yes, that's exactly what happened. And if you look at all our pivots on Friday, right? If you look at all our pivots, Google got it destroyed, right? Google got destroyed. I was looking at NVIDIA to the upside, did not confirm. Guess what? I kind of like it. Couple of days before earnings to the downside, but I'm not probably going to play it only because I don't want that, a little relief rally going into earnings. That's a whole different story. Here's the point. Meta, you guys remember Meta was the strongest stock out there, 20 days in a row, did not have a downtick, right? In 20 consecutive sessions, and then it started losing channels, 693.60. If it builds below, can flush, right? Here's Meta, right? Here's Meta, META, if I could type. It lost 693, stock closed at the lows of the day, right? Down 10 points from the 20-day support, okay? Here is Tesla, okay? Here's Tesla, right? Here's Tesla. Tesla was great, was absolutely great. I traded it 4 times. The last one was an unbelievable rejection off the 342.60s, pretty much closed at the low of the day. I'm still holding a runner. But here's the point. 347.50, if it builds below, can flush, right? Here was Tesla. We knew what the upside pivot was going to be, right? Because that was last week's highs. We knew the upside pivot is going to be 368. But once it lost this whole channel of 1, 2, 3, 4, 5, 6 days, that's a week and change, right? And it lost the previous day's low of 347.50. This is what it did. It went down 10 points. And that's the scary part about constantly being long above the 50-day moving average, because at any single point, your stock that you think hit a bottom can lose the previous day's range, could lose the previous week's range, and now you're upside down and looking for help. And again, if you're a Tesla shareholder, well, if this week's lows, right, if Friday's lows gets confirmed Monday or Tuesday, well, why can't we test the previous range row of 325? And well, I'm hoping that's what's going to happen. But again, that's the whole point. Understanding that, again, above the 50 days bullish, below the 50 days bearish. Same thing with Google, right? Google got murdered, right? Google got murdered. It looks like next measure potential is 178, 176. Amazon. I love Amazon. You love Amazon. My wife orders from Amazon 3 times a week. But the point is, it lost its 50-day. What do you think is going to happen? Is it going to just magically get above the 50-day moving average, right? So now it's trending lower. The lower lows, lower highs, lower lows. These are consecutive days. Look how many consecutive days of lower highs and lower lows you had. Even before we lost the 50-day moving average, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is 12 days in a row of lower highs and lower lows, despite some days that it was trying to go green, trying to reclaim the previous day's range. So again, folks, I'm not trying to preach, okay? I'm not trying to preach. I'm not trying to be that guy, but you can't turn to a trader and tell me, well, I'll be all right 5 years from now. Okay, cool. I hope you are, right? I hope you are. I hope whatever stock you're holding does very, very well. But the point is, from an intraday trader, right? From an intraday trader that trades on both sides of the market, we're getting great opportunities. We're getting really strong opportunities from both sides of the market. And depending where the overall scheme of sentiment is, you can have a very big aggressive driving force. If you look at the end of the week, again, the market did not like the fact that data is showing that is a slow economy in our table. Duh, that's breaking news. You had a pretty big decline this week. S&P went down 1.7%. The Dow and the Nasdaq gave back 2.5%. You still have swirling headlines going on with all this trade talk. Now they're talking about another COVID strain. I think I heard something about that on Friday. There's a lot of mishmash going on. A lot of people obviously did not want to be long over the weekend. If you look what happened on Friday, pretty aggressive bloodbath here. You had the Dow down 750 points. You had the Nasdaq down 438 points, and you had the S&P down 100. That's a healthy move down. So when you're looking for trades, right, for Monday, again, I don't know what's going to happen on Monday. We could have a relief rally. I have no idea, but I'm preparing, right? I'm preparing for stocks that potentially could go lower again, right? Could continue the washout from Friday's sell-off. So let me give you guys some ideas for a Monday. If they confirm, great. If they don't, again, there's two sides of the market. We'll trade both of them. Tesla, again, broke a 1 week range, closed below its intermediate support. If it starts losing the previous days low, keep an eye on this thing. You could see a move to 325. SMCI, I'm still watching this thing for a back test. It still has not taken out a previous day's range on the close. You can see it, right? Still hasn't taken out a previous days on the range. I want to keep an eye on it. If this thing does eventually lose the 5-day moving average, I want to be a seller in the stock. MSTR, we talked about MSTR and Coinbase on Wednesday's video. Now, this is the lowest close on MSTR in this whole formation. This thing confirms Friday's channel. You could see the December 30 lows of 285. Coinbase got a PR earlier in the morning on Friday about the SEC suspending a lawsuit, investigation, whatever the hell it is. Whoever bought it up, you bought it into supply, got rejected with the 5-day moving average, stock collapse. All it needs to do is now start losing this 230s area, and you can have a lot of room down. So be very, very wary of that as well. So that's it, folks. That's it. Again, I'm not trying to preach. I'm not trying to convince you one way or another. You know it for yourself. When you're sitting there in the dark by yourself with your thoughts, you know exactly what you're seeing. Your eyes don't lie. The market trades aggressively, both sides of the market, but the common denominator is that 50-day wedge, right? That 50-day line in the sand. Over the 50-day bullish, below the 50-day bearish. As of right now, the Qs going into this week are still above the 50-day moving average. But guys, any close, and write down this number, any close below 523 on the Qs is going to have a little bit of a problem. Last but not least, NVIDIA reports this week. Again, all bets are off on earnings. Maybe it goes higher on earnings. Maybe it goes down on earnings. I have no idea. Neither do you. Neither does some guy on social media. Nobody knows, right? It could have a great quarter and sell it off. It could have a crappy quarter and rally it. We don't know. Having said that, hope everybody is doing really, really well. God bless, and with God's help, I'll see you all on the field on Monday.